Welcome to the Valmika Property Investing Podcast, where I, your host, share the key to success in the Australian property investing market. I'm the founder of Valmika Buyers Agency. You can find us at valmikaproperty.com. The contents of this podcast are the personal opinion of your host and are intended for entertainment purposes only. Any financial advice must be obtained from your trusted financial advisor or a qualified professional. Many of our clients have requested the topic of this episode, so we decided to do it. The topic is called Avoiding Common Property Investment Mistakes. So I'm going to take you through the top blunders made by property investors, and they divided into 5 segments. The first one is lack of research, and this is a very important one. The second one is emotional decision making that so many of us fall into, because at the end of the day, property is an emotional asset. Third segment is ignoring the importance of location. That's a big one. Segment 4 is underestimating costs. I'll give you a few tips around that one. And then number 5, overlooking due diligence. Then, of course, at the end of this episode, I'll go through the auction results for the weekend of the 10th of September 2023. Okay, so let's dive straight into it. First topic, research and due diligence. I can't stress the importance of research. It is through thorough research that you will form your factual base. And your factual base is what will carry you through the rest of your property investment journey. If you don't know the facts, you start off from a very weak base, and you're very likely to make a mistake. So what do I mean by thorough research? So that includes property market analysis and understanding the trends. This is all based on data. So you'll need to understand all the data on the market. That includes pre-market, off-market, post-market sales and pricings, and on-market sales and pricings. Once you get this complete picture of what's going on in the market factually, you must determine your cost per square meter for the different grades of finishes of the asset. So now that includes understanding what is the cost per square meter of the land. What's the cost per square meter under roof on the different grades of finishes, from market norm to high-end finishes. Once you've got that strong base, you can walk into any property and understand what its value is, dependent on not only on the number of bathrooms or number of bedrooms, but on the square meterage under that roof, so that you can compare apples with apples. This is very, very important. Secondly, you must understand the trends of the suburbs and the areas. And to understand that, you need data on the demographics of the area. Buying power is very, very important. So understanding the buying power of your demographics can help you understand the trend of that property, not only based on historical data, but on what will happen in the future. Other important data is days in the market and vacancy rates. This gives you a solid foundation, not only when making a valuation on the asset, so going in with confidence into buying the property, but in your negotiation. It's very difficult to negotiate against someone who's got a very strong factual base, because you can't argue against facts. Facts are facts. Next is the due diligence. Now, due diligence is also a very, very important component, and a lot of people make mistakes by not doing their due diligence properly. So by due diligence, firstly is property inspections. You must inspect a property. If you don't do it, you must get a professional to do it for you, or someone that you trust. The agents are very, very skilled at hiring photographers, and most of the time, the pictures aren't a true reflection of what the property is. I'll give you an example. When you look at the pictures on Domain or realestate.com, the properties always look a lot bigger in the pictures than they are in real life. And that's because the photographers are very skilled at the way they take those photos. And the photos hide a lot of the defects that the properties may have. So it's always important to inspect the property. The second part of your due diligence, which is very important, is the building and pest. It's very worthwhile doing a building and pest inspection report. I've seen investors make so many mistakes where they buy an asset where the foundations are collapsing. The two most expensive parts of a property that can go wrong are the foundations and the roof. If there's a major issue with both of those or either of those, then you're in for a huge expense. And that expense is just going to eat away at your returns and make the property investment a dud. Secondly, you must do the legal checks properly. So get a property. I always recommend a property lawyer. And a property lawyer that we use is someone they're more a smaller property law firm, because I tend to find, and no disrespect to any of the bigger law firms, they might all do this, but you want to try and avoid a lawyer who utilizes, it's all about volume, and they'll put on a junior lawyer with very little experience, or a legal secretary with very little experience, just to get that volume of conveyancing out the door. It's worthwhile getting a senior lawyer to have a look at the contractual documents and to do a deep dive into the actual property, like making sure that all the council's approvals have been attained, for example. I recently saw an asset that its guide price was very, very competitive. And when I had a look at it, I thought to myself, this asset is definitely way worth more than the guide price. But when we did a little bit of a deeper dive into when we did our due diligence on this, we discovered that there wasn't a council approval for a foundation wall, which was a crucial structural element of the property. And as a result, if that wasn't obtained and the council didn't approve it, and removing that could be an extremely expensive exercise. So it's very important to do your legal checks. The next segment is the emotional decision-making segment. If you've performed your research and due diligence well, it helps you avoid emotional decision-making because you'll have a strong factual basis. It's important to make the decision on the property, whether it's for your own occupied or for investment, to stay away from emotions. Emotions can ruin deals and can make investors pay significantly more than what the property is worth, or get into a property that has some serious flaws just purely because of a nice coat of paint and styling that the real estate agents do. So it's really important to avoid the emotional side of the decision making. I highly recommend doing the research and due diligence process thoroughly and sticking to those facts. Do not make the emotional aspects of it come into play. The next segment is all about location. And you've heard this saying about property. It's all about location, 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 location. There's a few important things to look at in the location. And those are factors like infrastructure. If the suburb has strong infrastructure elements, strong train lines, good public transport, easy access to freeways, those aspects make that location a lot more investable because it has easy access to infrastructure. Secondly, amenities. So investors and property and people looking to live in those areas put a high focus on amenities. So if it improves their lifestyle, so they've got access to cafes and restaurants, it improves the quality of life. And as a result, that location will have a higher importance. Thirdly is the growth potential of that location. So rule of thumb is, if you're going to invest in an area that is purely a holiday destination, then you're going to be exposed to cycles. So if an economy goes into a bear market, the first properties to get sold are the vacation properties. So they do not have the growth potential that assets in areas close to CBDs have, because those are the areas people need to live because that's where they work. So they have stronger growth dynamics. So you'll find that areas close to the Sydney CBD or close to the major hubs like Brisbane and Perth, for example, those areas have not only have stronger growth potential, but they weather the storm of cycles of bear markets a lot better than the regional or holiday destinations. Now, I'm not saying that regional areas are bad. Regional areas have a good combination of growth and yield. However, those areas must have strong employment statistics, must have good demographics. So the location is very important for making the right property decision. Moving on to the next segment, and that's on budgeting and cost estimation. A big mistake that I've seen be made is people do their numbers based on the initial costs, on just acquiring the asset, but they forget about the ongoing costs to hold that assets. The holding costs are very important because making a good return on property is being able to hold on to that property, being able to stay in the game, so to speak. So if the costs, the ongoing costs of holding that property are not, those sums are not done properly, then the future dream of owning that asset and doing well of that asset fades away very quickly. So what are the extra going costs? So that's the outgoing costs, like insurance. Now, insurance is very important in Australia. So we've recently had flooding, and before that there were fires. So it's very important not only to take into account the current cost of insurance, but the ongoing cost of increases on that insurance, because we live in a country that has exposure to the elements, and those elements make insurance costs increase over time. So make sure you not only take into account the current cost of interest, but the ongoing cost of insurance. Then secondly, there's the maintenance costs of holding that assets. So it's not like you buy the property and then you just sit back and reap the rewards of earning the rentals or just living in it. The property needs to be maintained. In order to get the best bang for your buck out of an asset, it needs to be maintained properly, because if it's not, then it deters future investors from buying the property, as it just costs too much to put it back on the right path, and it doesn't have that emotional element that you need when you sell property. So maintaining it is very important. If you've invested in a unit, then the strata costs are very important. So if there's any special levies against the asset, those special levies can eat into your returns quite substantially. So it's always important to look at that. And one thing that comes to mind is concrete cancer in a lot of these older buildings. So if a building is older, do a proper inspection into the property, and things like concrete cancer need to be at front of mind when looking into these assets. Another important cost is interest rates. So interest rates don't stay the same over time. Majority of the loans in Australia are floating interest rates. So future interest rate hikes, you're going to be exposed to them. Future interest rate cuts, you might be exposed to as well. So you might see an opportunity to get into a property now because it's going to get the cost will get cheaper, the interest rate cost will get cheaper in the future, and back to back. So it moves in cycles. So you must be able to stay in the game to be able to afford those principal and interest payments or interest only payments, depending on the structure of your loan. The other important component is taxes. So land tax is treated differently in all the states in Australia. So it's important to understand how land tax is going to influence your cost of holding that asset. And I'll go into this a little bit more in the next segment. And the next segment is the legal aspects of property investment. This is a very important part to property investing as well. And a lot of people ignore this part. I can't stress the importance enough of using professionals like lawyers, conveyancers, accountants, and buyer's agents in the property investment process. Not only is it important to consider the setting up a legal structure around purchasing your asset, and this is important for asset protection and tax efficiencies. So taking into account whether you want to purchase it in a trust or in a company or under your own personal name as a sole proprietor, for example, there's different asset protection elements and tax efficiency elements to it. And it's important to have this structured properly because buying property is such a big decision and it's such an expensive transaction that you're making in your life. It's important to do it properly. And I'll give you a few examples. So if you purchase it under your name, then you can take advantage of negative gearing. However, if you get sued, then that asset is exposed. So the next thing is to put it into a trust or into a company. But putting into a trust and a company, depending on the state that you're in, you can't take advantage of the land tax threshold that you would if you were in a purchasing it under your own name, and you can't take advantage of the negative gearing. However, you will be protected, for example, that's in a trust. You'll have that protection in a company, but a little bit less so. So it's important to talk through these things with a qualified professional, set up the structure to put the asset into. This is very, very crucial. So going through this journey, there are many, many mistakes that you can make. And doing the job properly is sometimes very difficult because, especially like the research component, unless you've got strong relationships with agents, unless you've got a bigger understanding of the whole market and not just what's on market from Domain and realestate.com, for example, I'd highly recommend using a buyer's agent. They have complete access. Like us at Valmica, we have a deep component on the research. We have access to the entire market and able to do correlation dynamics as well within the market. Also, buyer's agents do a thorough DD. They project manage the DD. They've got good contacts into professionals who can do the DD process properly and get a good understanding of where that asset is valued at. They then take it through to the next step of being able to negotiate off those facts in a professional and meaningful way. Also providing an auction bidding service, and then project managing the paperwork and the legal structures that I've just taken you through, and all of this straight through to the settlement. So it's very advisable to use a professional. What we do at Valmiga, we tend to save our clients on average between 10 to 30%, depending on the cycle, and more than what they would be able to do when purchasing the property themselves. Okay, so moving on to the auction clearance for this weekend of the 10th of September. New South Wales had another strong showing with a 71% clearance rate, with Sydney clearing at 73%. Victoria had a good weekend with an uptick in their clearance rate. So Victoria clearing at 71%, with Melbourne at 71.5%. Still, the strongest state out of the majors is South Australia, clearing at a very strong 86%, with Adelaide clearing at almost 89%. Queensland, a slight improvement from last week, clearing at 55%, with Brisbane slightly lower at 59%. Then the Western Australia, slight uptick from last week, clearing at 53.8%, and Perth clearing at 57%. I hope you enjoyed this week's podcast, and we look forward to seeing you on the next one. Thank you for joining me on this episode of the Valmika Property Investing Podcast. I hope you found our discussion insightful and empowering. If you are interested in finding out more about our services at Valmika Buyers Agency, visit our website at valmikaproperty.com. There you'll discover how we can assist you in making informed decisions and achieving your property goals. See you on the next episode.